equities and we were buying. Remember that conversation, Kim? Everybody was panic selling equities and we were buying into the bottom edge. Were we right? Were we correct to buy into the bottom edge of equities or not? Absolutely. It looks kind of stupid if we didn't succeed on that one, because we were buying on several days rotations here. So you can see that that little rotation here was perfect. So you can understand that this is something that we actually had already called in advance. Now, one of the big reasons why we called this was there were some reasons to be selling. Absolutely, there were some reasons to be selling. But you'll probably remember that there's been a phrase or a sentence I've used several times, or a point I've made several times, about the fact that if I had to rely on somebody to lean against as a panic was running around the world, it'd be the guys that insure the markets, the specialists. And when we look at the specialist rotation, one of the things that I was getting from the specialist rotation was this here. Take a look and you tell me if it's bearish. Take a look and tell me if that's bearish. Well, of course it's not bearish. So when we look at the specialist rotation, I'm looking at a market that tells me that I can safely buy into the bottom edges. Now, of course I'm concerned, because if I'm going to buy the bottom edges, I'd imagine that somebody like Warren would be trying to get in there ahead of me. They would be doing that rotation in their high growth type markets. But perhaps they're not actually that interested in the high growth at this stage. Perhaps they're just wanting to get into maybe some defensive stocks at first off the bottom edge. That's why the bottom edge is not always necessarily the location of the big Warren rotation. Yes? Maybe not always the big Warren rotation. What does that mean? Well, obviously, if you're buying a bottom edge and you're relatively early to the party because you've maybe sold some puts, and obviously that takes us into this world of looking at the puts and calls to see just how many puts. Remember, this is why we highlighted this area in the first place. Yes, that's why we did the classroom. Yes, Kim? That's exactly the reason we did the classroom. Because in the original beginning, we were talking about the puts and calls reaching this peak of volume, suggesting that there was somebody holding a lot of cash in here. And we talked about this live the day after this happened, and we said, right, it's time to buy bottom edges because everybody's got cash. Now here's the question, guys, and it's not a question that's necessarily got a correct answer. It's just a question for you to think about as a background subject. If you're coming down into a bottom edge, are you going to buy growth or are you going to buy safety if you're not terribly sure about the longer term growth of the market? It's quite an interesting question, because obviously the answer to that question would be the Warren line. Of course, you're not going to make as much money if you use that put option money to buy growth stocks. You could make an absolute fortune. But if you're a little bit concerned about growth because of interest rates, if you're a little bit concerned about growth because of some of the background chatter, but you still need to buy some stocks with all the cash you've got, well, perhaps it's a better experience to maybe buy some safe stocks, some utilities, for example. Just buy stocks that provide us with a good level of dividend income. So that's something we can start thinking about. Well, wait a second, maybe that is what's been happening. Maybe they're buying some dividend type stocks, stocks that provide us with a good, solid, safe track record. Something like YM against RTY, for example, could give us some of that information. If we look at simply the Warren rotation, we can see that Warren really didn't start to bid into this particularly aggressively. In fact, Warren was very slow to turn the corner on this trade. So they certainly weren't buying aggressive bottom edges. But they were buying bottom edges, make no mistake about it. That's why we saw the volatility pricing rotate out of short-term volatilities into medium-term volatilities, yes? So there is a storyline to be had from all of this information, isn't there? There's definitely something to be made from seeing this information developing. When we look at the possibility of tail risk, of course, we had been very bullish for a while here on equities. The tail risk really was massively divergent into these low prices. It had just taken a few days to stop moving and gave us a nice easy flip back around into that tail risk storyline. So that's a pretty good storyline in the background, isn't it? Pretty good. So when we understand this, even looking at the gamma line, the gamma line's been nothing but bullish for us at the bottom edge. If the volatility is increasing, usually that means that the volatility of volatility is increasing because gamma gets bigger as the price falls. You already know that because delta gets bigger. The pace of delta gets bigger as the price falls until it reaches ultimately 100 out of 100, right? As soon as it reaches 1.0 out of 1.0, that's when the delta can't go any further, and that's it. The delta's finished. The delta is now basically the underlying product. So when we understand that, if the gamma is not dropping, if the volatility of volatility is not dropping, and this is the VVIX 1 over, again, I'm looking at a market that has a lot more upside than downside at this point. I like the story. Now, it's obviously something that we have to be careful with. We've got to go through a few times. We've got to kind of look at back to front several times just to try and read as many of these opportunities as we can. When we look at, for example, the rotations in the world of quality spreads, LQD and HYG against ZB, you can see that nobody was rotating quality spreads at this stage. Nobody. You can see the quality spread simply hadn't been purchased at this stage. So it looks like a defensive purchase, doesn't it? But they've got the cash to buy something. But what they've bought is defensive stocks. So if they've bought defensive stocks, are we expecting a dynamic buy-side bounce? Or are we expecting a kind of slow, lethargic crawl off the bottom edges? What do you think? We were expecting a slow, lethargic crawl off the bottom edges, correct? We're not expecting a buy-side bounce. We're not expecting a brilliant buy-side pop because nobody's buying the growth stocks. They're buying defensive stocks. Maybe say, how do we know they're buying defensive stocks? How do we know that into this low volatility that they're buying defensive stocks? Put a rotation on your charts and figure it out for yourself. You can see it. I don't know if I've got that rotation on this chart, so I'll zoom in to a billion different lines to see if I've got that rotation. And the answer to all of that is no, I don't. So I'll just some of you can look out for yourself, guys. I'll put another bit of chart stuff in. So what will we do? We'll look at the YM against the Russell, or the YM against the Nasdaq. Let's do the YM Nasdaq, guys. Okay, so we already know that the YM Nasdaq is a sentiment line. If people are really bullish stocks, they'll be buying Nasdaq. Full stop, end of story. You'll make a lot more from the growth of a stock than you'll ever make on the dividend of a stock, right? Unless, of course, you don't think there's going to be any growth. So when I see a lethargic Nasdaq YM line, it doesn't mean the market's necessarily bearish. It just means it's not mega bullish at the top edges. So when I see this lethargic line dragging its heels off the bottom prints here, in line with, of course, the use of all of that beautiful, lovely cash, in line with volatility changing direction, well, simply it's just the fact that people have bought defensive stocks at the bottom edges, guys, not attacking stocks at the bottom edges. You can see when they start buying attacking stocks, we generally, as a rule, get these fast ripping moves off the bottom edges. But one of the things that seems to happen at the bottom edges is what? Take a look for yourself. What observation can you make? Who's ever traded for a big fund? Has anybody ever traded for a big fund? Anybody ever traded for a big fund trader? Well, the simple fact is, they don't normally buy massive risk stocks at bottom edges. They'll sell risk stocks at top edges almost immediately and rotate into defensive stocks. But at the bottom edge, they don't actually buy risk stocks until they know it's a bottom edge, because they could still lose a lot of money, right, during a dropping market. Do you understand? But they've got a lot of cash. They've got to buy something. So what's going to happen is that most funds will buy the dividend stocks first. So you'll see at bottom edges. Let's get rid of the volatility for a second. You see at the bottom edges that the rotational line never seems to lead a buy. Very rarely does it seem to lead a buy. You see that? This rotation here seems a bit slow. This rotation here seems to be in line. This rotation here seems to be a bit slow. It never seems to lead the bottom edge because of the answer that I've just given you. For that simple reason that they're not buying necessarily the growth stocks. They'll buy the defensive stocks to see if the market pauses enough. You understand? Anybody? Is there anybody alive in the universe that I'm existing in? Nope, right, I'll get rid of that and we'll maybe talk about it some other time. Alrighty, let's move into some other markets. I am a buyer of spreads at the moment. We've seen a little turn in the spreads here. I'm going to be bidding into the low price of spreads at the moment. I like that storyline. I am a spread buyer. I am a spread buyer at the moment. I like it. And that's obviously a long equity trade. So when you see the red line turning up and we've got a discount down here, I like the spread as a buy opportunity. I like the equities as a buy opportunity. And obviously that equity buy and spread buy had a nice little buy side rally. And obviously we're watching, at the moment equities is not a buy, but the spread looks like it could be coming a buy again. So I might be tempted back in, guys.